Good morning. Am I audible?
Good morning, ma'am.
Okay. So today we'll be starting with the accounting for not-for-profit organizations. See, first of all, whenever we are talking about not-for-profit entities, we need to understand that these organizations, they are not engaged in any business activity. That means we are not saying that they are not doing anything. They are certainly doing a lot many things, but it is not a business activity. Right? So in that case, they are just providing these services to the people, or maybe you can say to their members. Like, for example, if you're talking about a club is also a not-profit, or what we call as the NPO, but they provide services to their members, right? Similarly, if I talk about hospitals also, they are NPOs, and they provide services to the general public, that means to the people. And the intention over there is not to make profits. No doubt, if we talk about the present day scenario, everyone is interested in making profits, but still we do not say that their intention is to make profit, because their main intention or their main purpose is to provide services to the people or to the members. And we have various examples for these non-profit organizations, like we can say sports clubs, social organizations, religious institutions, hospitals, educational institutions, professional bodies, libraries, etc. Now, whenever we are talking about these non-profit entities, some of these entities, they undertake the trading activities to generate income for their working fund. Right? So that means their basic objective is to provide these services, but at the same time, they have their trading also. That means in whichever product they are dealing. So they sell those products also. But even when they sell those products, their basic objective is not to earn profit, but to earn, you can say, funds for their day-to-day working. And those funds, they are basically known as working funds. Like in case of commercial organizations, we call it as working capital, right? So for example, if we're talking about any sports club, and they are selling their sports goods, I mean, they have a shop at their uh, premises, and within that shop, they are selling their products, and these products are sold not at the market price, but at a reduced price. Why? Because their objective is not to earn profits. No matter, they are providing the products at a cost higher than their actual cost, but that is just to get the working fund. That means the funds that they require for their day-to-day working. Now, the question arises, what exactly is the difference between the commercial entities, or what we call as any normal business house, and a non-profit entity? See, in case of a commercial organization, the basic objective is to earn profit. Whereas in case of non-profit entities, their basic objective is not to earn profit, but to render services, right? In case of your commercial entities, if I talk about the owners are named by the, or you can say they are known by the term proprietors or owners. And in case of a company, it is shareholders, right? But when I talk about the non-profit entities, in case of non-profit entities, there is no owner as such, right? So it has its members. And when we talk about these members are known as subscribers or members. So we do not use the term owner, because this we say that there is no one owner, or there is no owner of the NPO, right? Now, as far as your profit is concerned, see, whatever you are doing in the business, that is giving you some amount of profit. Even NPOs also, at times they are able to earn certain amount of money. So in such case, the profit in case of commercial entities is distributed among the owners, and profit in case of non-profit entities is not distributed among the owners. It will remain in the NPO itself, in the organization itself, so that can be used further for working, right? Now, in case of commercial entities, as we use the term profit or loss, right? So that means whatever you are earning is known by the name of profit, or if you are losing, then it is known by the name of loss. And then it can be either withdrawn by the proprietor or the owner, or it can be retained in the business. That is your choice. But when we talk about non-profit entities, in case of non-profit entities, we do not call it as profit or loss. If it is a situation of, you can say, when your revenue is more as compared to your expenses, then it is known as surplus, not profit. That means profit in this case is known as surplus. And in case of the other way around, that means in case of loss, that loss again is not known by name of loss, but it is known as deficit profit organization. And it cannot be withdrawn by the members. Why it cannot be withdrawn? Because it is not distributed among the members. Now, if I talk about the accounting statements, the financial statements that are to be prepared, see, in case of commercial entities, we prepare, remember, the manufacturing or the trading account, the profit and loss account, and the balance sheet, right? But if we talk about the, in that case, we don't have any trading or P&L account because their basic objective is not to earn profit. So in that case, we prepare a different set of accounts that is known as receipts and payments account, right? Which is similar to your cash book. And at the same time, we prepare the income and expenditure account. So you can say the P&L account is replaced by income and expenditure account in case of NPOs. And yes, balance sheet is certainly prepared even in case of NPOs, because every organization would like to know, their financial position, like what are they up to, or how strong they are with respect to their financial standing. And if I talk about the accounting system that is being followed, in commercial entities, we follow the accrual system. That means the accrual basis of accounting. But when we talk about the non-profit organizations, there we have a hybrid system. See, we have two systems of accounting. One is known as the cash system and the other one is known as the accrual system. Now, when we are talking about these NPOs, they follow a hybrid system. That means they use some features of the accrual system and some features of the cash system. Now, when I talk about the difference between the accrual and the cash basis of accounting, accrual accounting is based on the concept of as and when a particular thing becomes due. That means if a thing is due, if an expense or an income is due, irrespective of the fact whether it is paid or received or not, then it is to be recorded. Whereas the cash basis of accounting says that you will record a particular thing only if cash is involved. Cash means either a payment is received or you can say a payment is made. So in that case, you are not bothered whether it is due or not, whether it is of the previous year or current year or next year. But by all means, it is to be recorded only when a payment is there, right? But when we talk about the accrual system, in case of accrual system, payment is not important. It is the accrual which is important. And when I use the word accrual, that means whether a particular thing is due or not. Now, let's talk about the characteristics of non-profit organizations. Now, whenever we are talking about the characteristics, the first characteristics, as I told you, that they provide services to a specific group, right? Just a minute. this is health with spelling was incorrect. So I'll just am I audible?
Yes, ma'am.
Okay, fine. So whenever we are talking about these non-profit organizations, as I told you that their basic objective is to provide services to a specific group, and that specific group could be maybe the members of the organization, like in case of club I told you, or maybe it is, like the general public, like in case of healthcare services, the hospitals, there is no restriction that who can come and get these services. Anyone who would like to come and visit the hospital is free to do that. But in case of clubs and associations, then certainly there is a limit that only the members will be provided with the services. Right. Secondly, these organizations, they are organized as charitable trusts or societies. Right. And whenever you become a member of any particular such society or a trust, then these are known as the members. And these members, they are further known by the term subscribers, right? Because they have taken the subscription for that particular organization or for that particular club. Then with respect to their day-to-day management, these clubs or these associations or these hospitals, they are basically managed by a managing committee. Now the question arises that from where do this managing committee come? This managing committee is elected among the members, right? So that means from all the members who are the subscribers of that particular organization, a particular group is elected the managing committee. Then see, to run any organization, you cannot expect that the organization will run free of cost. It requires funds for its day-to-day operations. And for those day-to-day operations, you have to see that from where you will get those funds, right? So all the members, when they pay their subscription, when these organizations, they get donations either from the members or from any XYZ person, or maybe, in the form of legacies or grants and all. Grant can be from, you can say, from the government, right? And various other institutions which provide grants. And with respect to your legacies, you can say that if suppose a particular member or a person has left some amount or maybe some property in his or her will and has been donated to the, or you can say it has been written in the name of the particular NPO, then that also becomes a source of income for the non-profit organizations. Now, whenever these organizations, they raise funds, all these funds are added, or you can say credited to the capital fund or the general fund. That is the basic fund, or you can say the basic amount with which, I mean, it's just like, the capital with which you start your organization, or the main capital invested in the business. So similarly, in this case also, it is the capital fund which is always there in the business. Now, as far as your surplus or deficit is concerned, as I told you, the surplus is not distributed among the members. Yeah, why? Because members are not the owners of the organization, but even then this surplus is credited to the capital fund. Like in case of sole proprietorships and partnerships, what do? That we add on the amount of net profit for the year to the capital account of the owners. But in this case, as you know that there is no owner as such, so whatever is the amount of capital fund, it is added to that capital fund, right? Then see, when I'm talking about a regular commercial business, I told you that commercial business, they build a reputation for them, for their organization based on the customer's satisfaction, mainly due to customer satisfaction, right? And maybe due to owner satisfaction also, because if the investors or if the owners are satisfied, then certainly it builds a brand name in the market. But when I talk about these non-profit organizations, they do not build their name based on the customer satisfaction. They build their name based on the welfare of the society, right? That means how much contribution they have given for the welfare of the society, that will give them a reputation. Then if I talk about any particular commercial organization, you know that you have to maintain your books of records, right? And when you have to maintain your books of records, or maybe your financial statements, then those financial statements are for your statutory requirements. No doubt even the internal people can use that, and they use it, but ultimately it is the statutory requirement. And the same is here also, that whatever records you are maintaining, it is either meant for the members or for the statutory requirement, or you can say it is for both, right? Because even the members can use it. So that is the reason I use the term either this or this, because either the members, if they want to go through the books of records, they can use it. And even if you are talking about the statutory requirement, then certainly you have to follow this. So as a result, it is prepared for both the groups. Now, when we are talking about these NPOs, let's just try to get into the intricacies related to the final accounts or the financial statements of your non-profit organizations. Now, with respect to your final accounts or financial statements of your non-profit organizations, first of all, you prepare three things. And those three things are receipt and payment account, income and expenditure account, and balance sheet, right? Balance sheet is same what we have studied till now. Your trading and P&L account is replaced by income and expenditure account. Fine. And your one more account is there in this case, that is your receipts and payment account. So starting with the first one, that is your receipts and payment account. See, whenever I'm talking about receipts and payments account, as the name suggests, it is dealing with receipts and payments, right? With respect to your organization. So we can say it is somewhat similar to your cash book. Like the way we prepare a cash book for a normal business house, similarly, we prepare a receipts and payment account for the NPOs. Right. So in this case, what do we do is that all cash transactions, whether capital nature transactions, whether revenue nature transactions, they are to be written over here. Whether receipt or payment, whether it is capital or revenue, every transaction which has cash involved in it will be written in your receipts and payments account. Then it also starts with the opening cash balance and will end with the closing cash balance. You can just have a look. See, as I told you, it starts with the opening cash in hand. When I'm talking about the term cash in hand, bank balance is also taken into account, right? So you can just have a look over here. I put a tick mark over here. Balance brought down cash, balance brought down bank, right? And then all the receipts. See, you can see even the format is the same like we used to have it in the cash book, right? So this side, that see, this line is your center of the receipts and payments account. So anything which is to the left of this is known as debit, and anything which is to the right of this is known as credit, right? So all the receipts, apart from your balance, all the receipts to be written on this side, like we have subscription, donation, bank interest, entrance fees, sale of old furniture, sale of old newspapers, collection of sports material, everything. on this side. Then on the credit side, we write all the payments. Now, we are talking about payments, payments could be different. See, the items that we are talking about can vary from organization to organization, right? So you might have, and some of the items are common among every NPO. That is salaries, maybe rent paid, printing and stationery, sports material, postage and telegram, savings certificate, expenditure for sports material. So depending upon in which kind of business you are, right? Then when we do the total of both the sides, then in that case, your balancing figure is nothing but your closing balance of cash and bank, right? So that means if the closing balance is given to you, then there will be no balancing figure. If the closing balance is not given, then your balancing figure is the closing balance of cash and bank. But do remember that whenever we are talking about the opening or the closing balance, cash in hand will always have a debit balance. When I say the term debit balance, that means it will have a positive balance because it is the asset, right? But a bank can have either a debit balance or a credit balance. Reason being, because bank can have a positive or a negative balance. When we say negative balance, it can be bank overdraft, right? So do not take it that bank will always have a positive balance. Bank can have, I'm not saying that it will have, but it can have a positive as well as a negative balance. But cash in hand will always be for sure positive. Maximum it can be zero, but nothing beyond zero. I mean, no negative figure can be there. Right. Now, when we are talking about these receipts and payments account, as I told you, all the receipts, whether they are of capital nature or they are of revenue nature, whether they are of the previous year or they are of the current year or they are of the upcoming year, that is not to be considered. It is just to be seen that whatever you are writing over here, cash has to be, cash or bank has to be involved in that, right? Now, only the actual cash receipts and cash payments are recorded in this. As I told you that non-cash items, like, when I'm saying depreciation charged on any fixed asset, so no doubt that depreciation is shown as an expense, but that depreciation is not involving cash in it. That means you don't have to pay anything in the form of cash when we are talking about depreciation. Similarly, if I'm saying outstanding expenses, maybe the salary is due for the month of March and you haven't made the payment, so that outstanding salary will not be written over here just because it has become due, right? As I told you, in case of receipts and payments account, you have to see that when cash is actually involved, due, not due is not to be considered, right? And similarly, even the non-cash items are not taken into account with respect to your receipts and payments account. And as I told you that at the end of the year, just now, when we are talking about the balancing part, as I told you, that for the balancing part, you will have your closing, or you can say the balancing figure as cash in hand and cash at bank. So they will become the closing figures, or you can say the balancing figures. And if suppose there is no figure, that means your cash bank balance is zero, right? But usually that doesn't happen that at any point of time it will be altogether zero. There might be a lesser amount or a higher amount, but still we usually see that the amount is there. Now, whenever we are talking about, as I told you that, whenever we are talking about this receipts and payments account, it is similar to your cash book. So you can see this is the format of your cash book, right? So in case of cash book also, you have receipts on this side and payments on this side. So and here when I write to balance brought down, it is your opening balance. And by balance carried down, it is your closing balance. So ultimately, we are talking about the almost a similar kind of a thing, right? And we prepare the cash book also so that the management people, they can know from where the cash is coming and from for which all purpose we are making the payment, right? And so ultimately your receipts and payments is also going to provide you information for the preparation of your income and expenditure account as well as your balance sheet. Now, this is the complete format of your receipts and payments account. As I told you, you start with the balance brought down for cash in hand and cash at bank and your balance carried down. Similarly for both the things. And all the receipts on this side, you can just have a look that these are the items that can be written under receipts and these are the items that we can write for payments. Now, moving on to the respective items of receipts and payments account. As I told you, all the receipts, whether capital or revenue, can be written here. Similarly, all the payments, whether capital or revenue, they will be written over here. Now, when I talk about the revenue receipts, first of all, it means when I'm talking about the amounts that are received on a recurring nature. That means you keep on getting these amounts repeatedly at regular intervals, maybe monthly, maybe half yearly, maybe annually, whatever may be the situation. And when I'm talking about such revenue receipts could be in the form of annual membership subscription, or maybe the admission fee, which is not to be capitalized, because some organizations, they say that the admission fee is not to be capitalized, and some organizations, they capitalized it because they say that it is just a one-time payment. So it is not a recurring nature. So as a result, we can capitalize it. So depending upon how you deal with it, right? Then if you have any receipts from sale of old newspapers and magazines, see, usually such organizations, they have multiple newspapers and magazines for which they have taken subscription. So they just cannot, think of that, okay, fine, we will be continuing with these. I mean, they will pile up in your organization. So at one point of time, you have to discard them. And when you discard them, so this becomes a regular habit, because every month you have, maybe every month or maybe once in 2 months, you have to discard all the old newspapers and magazines, right? So these are also you can say an inflow of cash. Similarly, if there is any, hall that you give it on rent, especially if I talk about the clubs and associations, they have such halls and they give it on rent for the people so that they can conduct their functions and all, right? So if you receive rent from such hall, then you can even consider it as your receipt. Then if in case you have some interest received, because you might have certain investments, so all the interest that you received from your investment, maybe from your fixed deposits, and maybe some loan that you have given to some other organization and you are receiving interest on that, so all these things are again a part of your revenue receipts. Then maybe further, you might have certain donations, grants and legacies, right? So all these again will be counted as your revenue receipt. Then locker rent, cloakroom rent received, maybe receipt from sale of refreshment, any other refreshment means, because if you have a cafeteria, right? So that cafeteria, people are going to, come and have their maybe lunch or maybe snacks or some of the other thing. So as a result, whatever refreshment they are getting, they are buying over there, that will ultimately further add to the receipts of the organization, right? And when we talk about such receipts, then again, it will be written in your receipts and payments account. And if you have any other item of a similar kind, which I might not have covered over here, but still it is applicable in your business. Second is your capital receipts. That means we are talking about the receipts which you have received during the current year. I'm not saying which are due in the current year. I'm just saying which are received during the current year, but the benefit of which will relate to future years also. That means these are not the regular, or you can say recurring nature transactions, right? So maybe if I'm talking about the amount that you have received as a loan. So taking a loan is not your regular core activity, or it's not a recurring activity. I mean, we never say that, you will be taking loan every month, right? So this is maybe once in 5 years you have taken one loan, or maybe the life membership subscription, because uh, there can be two types of subscriptions. One can be the annual subscription, and the other one can be the lifetime subscription. Annual subscription, you get it at regular intervals, that is yearly basis. But when I'm talking about the life membership subscription, then that the person is going to pay only once in his lifetime. So as a result, this life membership subscription will be a capital receipt. Similarly, maybe the admission fee to the extent of capitalized. As I told you, with respect to admission fee, there can be two things. Whether you consider it as a recurring nature transaction, so in that case, you will consider it as revenue receipt. And if you consider it as a capital nature transaction, because you get it only once from the member, so in that case, it can be considered as a capitalized transaction. Then further, if you are having certain assets, and after a particular time, when those assets, they become obsolete, or if you think they are of no use, so you want to sell them off. So whatever money you are getting out of it, that will also be a part of your capital receipt, because these are not the regular transactions. Similarly, certain legacies are there, and those legacies are for a specific purpose. So then they are a capital receipt. Then maybe some grant that you have received from the government for meeting a particular capital expenditure, or maybe any other which is applicable in your organization. Then if I talk about the revenue payments means the payments that you have to incur on a regular basis. That can be maybe in the form of salaries, wages, or the honorarium that you pay, maybe the traveling and the conveyance allowances, rents, taxes, etc. And maybe when we are talking about these revenue payments, it could be in the form of uh, whatever payment that we have to make for the purchase of refreshment, dinner, etc. Or maybe the interest that we have to give for the loan that we have taken, or maybe for the bank overdraft, or maybe any other payment that is applicable in your organization. Then if I talk about the capital payments, as I told you, these are the payments that you have made in the current year, but the benefit of which will relate to future years also. And these are the recurring nature transactions. Maybe construction expenses, or maybe you want to purchase a particular fixed asset, like a building or something like that, and you are not going to buy it every month. So that way, or maybe like if you have a library, so in that case we can say purchase of books for the library. That is also considered as a capital payment, because these books are to be used for a considerable amount of time. Then maybe if some loans have been advanced to the outsiders, that means your organization has granted some loans to outsiders, or maybe you have purchased some goods and equipments for your sports activities, or some other kind of activity. Now we move on to the next statement that has to be prepared, which is known as income and expenditure account. Now, as I told you, this income and expenditure account is similar to your profit and loss account that you prepare for a commercial business, right? And in this case, when we prepare the income and expenditure account, this is the format where, again, this line is the center of your income and expenditure account. To this is your debit, to this is your credit. And on the debit side, we record all the expenditure, and on the credit side, we record all the incomes. Now, In this case, whenever we calculate the, whenever we prepare the income and expenditure account, do remember that we are preparing it to calculate the surplus. If your income is more as compared to your expenditure, then it will be surplus. And if your income is, if your income is less as compared to your expenditure, then it will be a situation of deficit. No profit, no loss, surplus. We say it is surplus or deficit, right? Then finally, we prepare the balance sheet. Balance sheet is prepared in a similar manner like we used to prepare it for commercial organizations, with the only difference here we used to write capital for commercial organizations, but here in this case of NPOs, we write capital fund, right? And to this we add the surplus. We do not write profit, we write surplus. And if it is deficit, then we have to subtract it from the capital. Now, when we are talking about the preparation part of your income and expenditure account, your income and expenditure account can be prepared in this, which is known as the T form, right? And in this T form, I've already explained your debit side is the expenditure and credit side is the income, right? So all the revenue expenses on the debit side and all the revenue incomes on the credit side. It can further be prepared in the form of a statement like you can see it in the slide. This is known as the vertical format, right? And when we are talking about the vertical format, then in that case, you have to write your incomes first. Then after writing the incomes, you do the total. Then you write the expenditures. And after writing the expenditure, then you calculate your surplus or deficit. Now, when we are talking about this income and expenditure, as I told you, only revenue items are to be considered. Capital items are totally excluded from it, right? Because it is prepared on the assumption that we are just calculating the surplus and deficit with respect to the regular activities of the business. So all these capital nature transactions are not to be considered over here. And do remember that whenever we are preparing the income and expenditure account, it is prepared as per the accrual basis. When I use the term accrual basis, that means all the transactions related to current year will only be shown. You cannot say that you are going to show the items related to XYZ any year. No, it is only for the current year, neither for the previous year nor for the coming year, right? So as such, the revenue receipts, the payment related to previous and future year are to be adjusted. That means they are to be excluded, right? And if in case you have certain adjustments related to certain items, say for example, if I'm talking about salaries, right? And some portion of the salaries have been paid and some portion is still outstanding. So in that case, it will be shown as salaries plus outstanding salaries. That means whatever salary which is due for the current year and you haven't made the payment, that is to be added, because here we are dealing with the accrual basis of accounting. It is not the cash basis. So whatever, if something is due, that has to be written in the current year. So whatever adjustments are to be made with respect to outstanding expenses, accrued incomes, prepaid expenses, income received in advance, depreciation, provisions, etc., they all are to be adjusted and shown in your income and expenditure account. And finally, you calculate your surplus and deficit. Surplus is the situation when your income is more as compared to your expenses, and deficit is the situation when your expenses are more as compared to your income. Now, this is the format for your income and expenditure account. Where you can see that this side is your expenditure side and this side is your income side. So all the revenue nature transactions are to be shown over here, right? And in this, when we calculate the balancing figure, you can just have a look. If this side is less as compared to this side, then your balancing figure is surplus. And if this side is less, that means your income is less as compared to your expenses, then it is the case of deficit. And then we do the total of both the sides. Next, we move on to the balance sheet. As I told you, balance sheet is prepared to ascertain the financial position of the business, right? As such, there is no formal capital in case of NPOs, but yes, it may have a capital fund, right? So here, if it has any capital fund, so that is to be written over here, right? So we do prepare the balance sheet in the similar manner like we were preparing it for commercial organizations, but after preparing it, we can see that whatever is your balancing figure, or if the amount of capital fund is already given to you, then you will be calculating it. I mean, you will be writing it here. And to this, you add the surplus. Whatever is the surplus of the organization for the year, that is to be added. And if it is a deficit, then that is to be subtracted. Right? Now, whenever you have certain specific funds, that means the funds which are raised for a specific purpose, they are always shown separately on the liabilities side of the balance sheet, because they are a fund for a particular purpose or a particular cause, and you can use it for only that cause. You cannot use it for any XYZ purpose. You cannot utilize it the way you want. When the purpose is defined, then it has to be used for that particular purpose only. And as such, till the time it is used for that purpose, it is shown as a liability. Like in this case, you can see donation for building, right? Now, whenever we are talking about the balance sheet, see, there are two types of balance sheet. One is the opening balance sheet, that means at the starting of the year, and the one is the closing balance sheet at the end of the accounting year, right? So whenever we are talking about the opening balance sheet, many a times in the opening balance sheet, the amount of capital fund is not given to you. And the objective of preparing your opening balance sheet is to calculate the capital fund only. So what do? We just write down all the assets and the liabilities in their respective columns. And then there we can see that there is always a balancing figure, and that balancing figure is nothing but your capital fund figure, right? And this capital fund helps us to prepare the balance sheet at the end of the year. So that means at the end of the year, again, we'll prepare one more balance sheet where we have the capital fund now, and to this capital fund, we can add the surplus so that we can complete the balance sheet, right? And if in case you have certain previous year liabilities, if they are still outstanding, if they are still not yet paid, so that are to be taken forward, because a liability, if it is not paid once, that means till the time it is paid, it will be shown in the form of liabilities only in the balance sheet, as and when the year passes by, right? Then you also need to show your closing balance of cash. That means, or you can say the closing balance of your receipts and payments account, right? So whatever is the balance, that will be shown in the form of cash on the asset side of the balance sheet. And if in case it is an overdraft for the bank, then it will be shown on the liability side. Then there can be certain adjustments related to your assets. Say, for example, we had furniture initially of the value of 6,000, and now there is an addition of furniture. That means we have purchased more furniture of 8,000. So we will just add it here and we'll show it like this. That is initial value 6,000 plus the addition made, that is 8,000. So the total figure comes out to 14,000. Then many a times what happens is that during the year, a new asset has been acquired. That means previously it was not there in our books of accounts, but now we have acquired a new asset. Like in this case, you can see we have purchased government securities. So if this is the situation, then in that case, that is also to be added to your balance sheet. That means it is to be shown in your balance sheet. Similarly, if you have any fresh liability, so that fresh liability again is to be shown in your balance sheet on the liability side. If in case any such liability has arisen during the year, like maybe in the previous year you had a positive balance of bank, but now in the current year it has the bank has a credit balance, so that means it has become a bank overdraft. So we will be showing it on the liability side, right? Then if you have any outstanding assets maybe in the form of commission accrued. When I use the term commission accrued, that means I'm talking about commission which has become due but we have not yet received. So whether we have received it or not, but as per the accrual concept, that is to be shown in the books of accounts. Similarly, the outstanding liabilities, that could be in the form of outstanding expenses or maybe some income received in advance, they are to be shown on the liabilities side. So this is the format for your balance sheet. This side is your liabilities amount, assets amount, right? So what we'll do, we'll write down all the liabilities on this side, we'll write down all the assets on this side, and then we'll do the total, right? And as such, in the closing balance sheet, there will be no balancing figure until and unless some missing figure is there, which becomes the balancing figure for that particular balance sheet. Now, there are certain peculiar items which needs a special mention. Like, for example, if I'm talking about the subscription. See, you have to calculate the current year subscription that is to be shown on the credit side of the income and expenditure account. Because when we are talking about the income and expenditure account, I told you income and expenditure account is prepared on the basis of accrual basis, right? Accrual basis means the thing which has become due. Fine. So in this case, you will not consider the subscription that you have received for the previous year. So that is to be excluded from this particular amount, because only the current year subscription is to be shown as per the accrual concept in the income and expenditure account, right? Now, whenever I'm talking about subscription, if it is a general subscription, then it is considered the way I showed you in the previous slide, like this one, right? But if it is a specific subscription means then, say for example, subscription for a tournament fund, or maybe subscription for construction of a building, or any particular purpose is defined for that subscription, then it is known as a specific subscription. And that specific subscription has to be capitalized. That means it will be shown on the liability side of the balance sheet, right? Because capital transactions are not shown in your income and expenditure account. Similar is the case for your donation. If it is a specific donation, then it will be treated as a capital receipt and it will be shown on the liability side of the balance sheet, right? Say for example, donation for building or maybe donation for library, etc. And if it is a general donation, then that general donation is for a general purpose. That means it can be used for any purpose. But in that case also, we will see that if it is a huge amount, then it should be capitalized and it is shown on the liability side. And if it is a small amount, it can be shown on the credit side of the income and expenditure. But the question arises, what do we mean by this large amount? A huge amount and a small amount. That varies from organization to organization, and you have to set your own limits depending upon, like, for a small organization, even 1 lakh rupee can be a big amount. But for big organizations, that 1 lakh could be a very small amount. So depending upon the overall transactions and the overall level of activities, that a huge amount and a small amount is to be decided. Then if you have received some grant, if suppose you have received a grant from the government could be central government, state government, or any local government authority, and that is for day-to-day expense, then it is to be treated as your income in the income and expenditure account. But if that grant is for a specific purpose, say for example, for the construction of a building, then it is to be capitalized, right? Now, next is the legacy. As I told you, in case of legacy, it means it is as per the will of a deceased person, right? So we consider it as a capital receipt and is shown on the liability side. But again, if it is a small amount, then it can be treated as income. And if suppose nothing is mentioned, right, that means there is no specific information related to that legacy, then it is preferably capitalized. Then next is your endowment fund. See, first of all, these endowment funds are meant for providing permanent means of support, right? So as a result, they are treated as a capital receipt. Then is your entrance fee. Entrance fee is basically submitted by the members when they get admission. So basically when they initially become the member of the given association or the club. So in this case also, if it is a small amount, then it is to be treated as a revenue item. And if it is a large amount, then it is to be treated as a capital item. Next is your sale of old assets. Sale of old assets certainly has to be capitalized, because when I'm talking about the assets, assets are considered as capital nature transactions only. But whatever is the amount of profit or loss on that sale, that should be treated as income or expenditure, and it will be shown in the income and expenditure account. Only the profit or loss, not the sale. And whatever is your sale of newspapers, periodicals, magazines, etc., they are certainly to be treated as income and shown in the income and expenditure account. Then there can be certain expenditure stock items like, stationery, sports materials. They all are called expenditure stock items. And the value of such items, they are used, you keep on using them, right? It is not that you are going to store these items for maybe for the next 10 years. But the value of such items that has been used is considered as an expense, and the value of the unused items are treated as assets, because ultimately they are going to be there for more than one accounting period, right? And whatever is your sale of scrap, grass, etc., that is to be treated as income. But if I talk about the life membership fee, in case of life membership, as I told you, it is a lump sum amount that is received from a particular member for its life membership subscription instead of the annual subscription. So as a result, this is an amount which is going to be received just one time. So it should be capitalized, right? Then special purpose fund. As I told you, all these special purpose funds, they are shown as a particular specific fund, and if there is any expense or income relating to that fund, then it should not be shown in the income and expenditure account, but it is adjusted from the fund on the liability side, because I told you if it is a specific fund, then it is to be shown on the liability side of the balance sheet and not in the income and expenditure account. So similarly, all the expenses related to it are also shown in the balance sheet. That means from the fund, you will subtract that particular amount, right? And then you will finally show the amount. Now you can just have a look certain numericals based on like how will you deal with the peculiar items. For example, you have a special purpose fund, the prize fund, that is 80,000. Prize fund investments are 80,000. Prize fund, sorry, income from prize fund investment is 8,000 and prize awarded are 6,000. This is the information given to you. So how do you prepare your balance sheet based on that? See, as I told you, prize fund, which is a specific fund, so that is to be shown on the liability side. So I've written it over here. Prize fund investment. Investment means it's my asset, so I will show it over here. Now, whatever is the income from prize fund investment, that is 8,000, that is added to the income prize fund, right? Here. So your total comes out to 88,000, and whatever expenses are there, that are to be adjusted over here itself. So that means net amount of 82,000 on the liability side, and my investments remains the same, that is 80,000. Similarly, suppose you have tournament fund of 50,000 tournament expenses 15,000 and receipts from tournament 20,000. See, in this case, I have shown it in the balance sheet. In this case, I've just prepared a statement like what is the amount. So both the ways you can deal with it. My opening balance is 50,000, and out of which I need to pay the expenses of 15,000, right? So I'll subtract 15,000, and there are certain receipts from the tournament, that is 20,000, so that will that is to be added. So the net amount will be calculated, that is 50,000 plus 20,000 minus 15,000. So net amount of 55,000 will be shown in the balance sheet on the liability side. Next is, how are the following dealt with in the accounts of a not-for-profit organization? Prize fund, prizes paid, match expenses. So the one more case is there. These are two different cases. Match fund, match expenses, investment of match fund, interest on match fund, investment, and prizes paid. Now, if I talk about the first one, prize fund is given to me as 50,000, and there are expenses related to prize awards, that is 20,000. So this 38,000 will be shown over here, right? And match expenses will be debited to the income and expenditure account. Reason being, match expenses are not related to prize. Prize fund and prizes paid are related to one head, that is prize fund, but match expenses are another set of expenses for which there is no specific fund. And if there is no specific fund, so that is to be shown in the income and expenditure account. Second case is, match fund of 1 lakh is given to you, and investment of match fund is given to you in the form of 60,000. And you have certain match expenses 35,000 and interest on match fund investment 3,000. So expenses minus and interest is added. So a net amount of 68,000 is there. And you also have prize awarded 19,000. That will be shown in your income and expenditure account because there is no particular head or no particular fund related to prize fund, right? Now, moving on to the next question. Bengal Cricket Club was inaugurated on 1st April 2018. It had the following receipts and payments during the year. Receipts of entrance fee. Entrance fee is a receipt, so I have written over here. Subscription 60,000 here. Donations 10,000 here. Then all the payments I have written it over here because they are asking you to prepare the receipts and payments account. So I will write it as in the books of Bengal Cricket Club, receipts and payments account for the year ended 31st March 2019. Then we'll do the total of both the sides. See, nothing was mentioned related to opening balance. So we'll assume that there was no opening balance as or it was a zero balance, or maybe it's a new organization. As in this case, it is specifically given that it was inaugurated on 1st April 2018. So certainly it was a new organization, and as such, there was no opening cash and bank balance. Now, when we do the total of both the sides, you can see that the balancing figure is coming on this side. So this will be my balance carried down, that is cash in hand, right? I'll do the total of both the sides. I can see my debit side is 80,000 and credit side is short by 17,000. So as such, my balance will be on the credit side. Now, next is related to subscription. As I told you, subscription has to be shown in the receipts and payment account. When I'm talking about receipts and payments account, then it is total. Whatever you have received in the current year, and it belongs to whether previous year, current year, or next year, whatever. If you have received it in the current year, that will be shown in your receipts and payments account. And there are certain adjustments that are required to calculate the figure of subscription that is to be shown in the income and expenditure account. For that matter, whatever is the amount of subscription that you have received in current, that will be shown over here. Right? To this, you will add the subscriptions outstanding at the end of the current year. When I'm saying it is at the end of the current year, that means it is outstanding subscriptions of the current year plus still outstanding subscription of the previous year. That means whatever you have not paid, sorry, not received, due but not received. And you need to add the subscription that you have received in advance in the beginning of the year. That means in the beginning of the current year, if you have received any subscription in advance, so that means it belongs to the current year itself. So that is also to be added because it is related to the current year. Now you also need to subtract the subscription outstanding in the beginning of the year. Whatever was the subscription outstanding in the beginning of the current year that was relating to previous year, so that is to be subtracted. And similarly, whatever subscription you have received in advance at the end of the current year, that will relate to the next year. So that is again to be subtracted, and it is not a part of the current year subscription. So finally, you will be getting the amount that is to be shown in the form of income and expenditure account on the credit side. If you want to prepare the subscription account, see, the thing you have to calculate is this one. But if you want to show it in this form, that means the account form, because some students, they are more um, familiar, or you can say they are more easy with the subscription account. So accordingly, you can prepare it. It is ultimately the same thing that you are calculating over here also. And depending upon the requirement of your organization, you also have to see that what is to be done. So you have to see how you want to proceed with the calculation of your subscription. Right? Now, you can just see how to deal with such questions. Subscriptions received during the year ended 31st March 2020 are for the year ended 31st March 2019. That means this is the figure related to 31st March 2019. That means it is received 1600. So this 1600 is outstanding for the previous year. So if it is outstanding for the previous year, right, so that means this is not related to the current year. I will be showing this as a minus figure. Then secondly, for the year ended 31st March 2020 is 84,400. This belongs to the current year. So this is certainly my current year figure, right? Then for the year ended 31st March 2021 is this much. That means this is the figure for the next year. No doubt you have received all these three figures in the current year, but out of these three figures, only the center figure relates to the current year. So you can directly take that figure, right? This one, and further see the adjustments, because they are saying there are 450 members each paying an annual subscription of 200. 1800 were in arrears for the year ended 31st March 2009. Calculate the amount of subscriptions to be credited to income and expenditure account for the year ended 31st March 2020. See, no doubt so many things are given to you, but if you want to make your things really simple, you can just have a look at this particular line. This. There are 450 members each paying an annual subscription of 400. So whether they have paid or not, whether you have received or not, that is immaterial. Because in case of in case of income and expenditure account, you deal with the transactions as per the accrual basis. And as per the accrual basis, they say that 450 members were supposed to make the payment at the rate of 200. Right, so that means a total of 450 into 200 was to be received. That is 90,000. So you can simply write 90,000, or you can deal with the intricacies. That is your choice. Then next is you have to prepare your balance sheet also. So when I'm talking about the opening balance sheet, in case of opening balance sheet, they have given 1800 in arrears for the year ended 31st March 2019. So that means you preparing your opening balance sheet, this was the figure. that was pending or that was outstanding. So in the opening balance sheet, the outstanding figure was 1800, right? But if I'm talking about the closing balance sheet, you can see that outstanding for the current year is 5600. Why? Because your total amount due for the current year is 90,000, out of which you have received 84,400. So that means 56,000 is outstanding. And still you can see that the total amount outstanding at the beginning of the year was 1800, and you have received only 1600 in the current year. So that means 200 is still outstanding for the previous year. No matter it is not related to the current year, but still as of today, it is the liability that is, sorry, it is the asset that you have to receive from the members. So if I talk about my today's financial position, then I am supposed to receive this much also. So this will be my closing balance sheet. One more question. Subscriptions in arrears on 31st March 2019 is 500. Subscription received in advance on 31st March 2019 for the year ended 31st March 2020 is 1100. Total subscription received during the year. Now, the amount of total is given to you, that is 3400. So I start with this, right? They are saying including 400 for the year ended 31st March 2019. So that means this 400 is not for the current year. So I will subtract it. 1200 for the year ended 31st March 2021. Again, not for the current year, right? So I will subtract this 1200 also. 300 for the year ended 31st March 2022. That means not for the next year, it is from next to next year. So that is again not related to the current year. So I will show it over here as a minus figure. Fine. So that means my net figure comes out to 33,500. But apart from this, they are also giving subscriptions outstanding for the year ended 31st March 2020. That means out of the current year subscription, 400 is outstanding, but that 400 is for the current year only. So that is again to be considered. So I'll add it over here, 400. And they have also given us that subscriptions received in advance on 31st March 2019 for the year ended on 31st March 2020. That means subscription paid at the beginning of the year for the current year is 1100. So that means that again belongs to the current year. So I will add it over here, and the final amount is shown on the income side of the income and expenditure account. And if you want to show this in the form of account, you can prepare it like this also. Now, next is the concept related to cost of goods consumed. This is a major item, and every organization will have a different item under this, because depending upon, like, which particular item is your cost of goods consumed, that will vary from organization to organization, because there might be a possibility that you are dealing with medicines, there might be a possibility that you are dealing with stationery, there might be a possibility that you are dealing with some other item, depending upon that. Now, whenever you have to calculate the amount of items consumed during the year, it is calculated as the amount that you pay during the year based on your receipts and payments account, to which you need to add your opening stock, add the creditors at the end, because if I'm talking about the creditors at the end, they are the creditors for the current year, which to which you have to still make the payment, and advance paid in the previous year. If in the previous year you have paid advance, that means it will belong to the current year. So as a result, that is again to be added, but you have to subtract the closing stock of asset. Closing stock, because that closing stock will not be used in the current year, and creditors in the beginning of the year. All those creditors were there in the beginning of the year, they must be the creditors of the previous year, to which to all those to whom we haven't made the payment. So they are again not for the current year, so we have subtracted. And whatever advance is paid in the current year, that means that advance will be for the upcoming year. So that is again not a part of the current year. So that is again to be subtracted. And finally, we'll be calculating the amount of item that will be consumed during the year, and to be shown on the debit side of the income and expenditure account, right? Like you can just have a look at the question. Calculate the amount to be posted to the income and expenditure account for the year ended 31st March 2020. Amount paid for stationery. See, the total amount paid is 5,400. Right? Stock of stationery in hand on 31st March 2020 is 250. So that means that becomes my closing stock for the current year. The closing stock for the current year will be used in the next year. So, but ultimately not in the current year. So I will be subtracting it over here. Right? So this is the amount that you have to show in the income and expenditure account with respect to the first case. Now moving on to the second case, where your stock of stationery in hand is 1,500 on 1st April 2019. Right? So that is my opening stock. Opening stock will certainly be used in the current year. So that is to be added. Then payment made for stationery during the year is 5,400. So my starting point is 5,400 plus the opening stock. Then your closing stock is 250. Right? This closing stock, as I told you, will be used in the next year. So accordingly, the amount that is to be debited to income and expenditure account is 6,650. Right? Now, okay. Then we move on to the next one. That is okay. Glaxo Club's balance sheet as at 1st April 2018 was as under: capital fund, tournament fund, subscription in advance, salaries unpaid are given to you, and sports equipment, grounds, billiards table, subscription outstanding, cash and bank balances are given to you. And apart from this, receipts account is given to you, and some additional information is also given to you. They are saying subscription still to be received 5,500, but subscription already received include 4,000 for next year. Salaries still unpaid are 6,000. Sports equipments are now valued at 45,000. Prepare income and expenditure account at the balance sheet after charging 10% depreciation on billiards table. Now, if I need to start with my income and expenditure account, first of all, you can just see okay. Okay, what all items we can straightforward? Let's just start with it. Subscriptions are given to us as 1,81,000. I start with this point, right? 1,81,000. But with respect to subscriptions, they are also writing subscriptions still to be received are 55,000, but subscription already received include 4,000 for next year. So let's make adjustments for this. That means your closing outstanding that you have not yet received is 5,500, and closing advance, that means the advance that you have received for the next year is 4,000. So that is to be subtracted, right? Then for here you can see subscription received in advance is 6,000, right? So, and here it is given subscription outstanding is 8,000. So if subscription outstanding is 8,000, that is your asset. So that will be shown over here. That is still outstanding 8,000. And the amount that is received in advance for the current year, that will be related to current year. So I will be adding it over here. So when I do the total, I get the net amount of 1,80,500. Fine. Then apart from that, I have sale of old materials 1,500. So I show it as here, right? Then sale of sports equipment will be my capital transaction, so not to be shown. Then entrance fee is 2,000. See, with respect to entrance fee, I have written it over here, right? And then life membership fee will be your capital transaction. Donation for tournament will be your specific fund. So that is again not to be shown in your income and expenditure account. Then wages and salaries, again to be shown over here. That is 60,000, right? But in that, they are saying that salaries still unpaid are 6,000, right? So that is to be, wait. Okay, salaries unpaid are 11,000 over here, and salaries still to be paid are 6,000 over here. So when I do the overall adjustment, I get it as 55,000. Then next is sale of sports, 6,000. Again, I can't show the sale over here. Then, okay, we were here. Upkeep of grounds is 10,000. Upkeep of ground 10,000. Then your stationery 15,000. Audit fee 2,000. 15 and 2. Then all these will not be shown over here because these are capital transactions. But further, they are saying that you need to charge 10% depreciation on billiards table. So let's see how much are the billiards table. My billiards tables are 60,000 and 10% depreciation means it is 6,000, right? Then interest, okay. You have 5% investments, 40,000, on which you have to pay, you will get to the interest at the rate of 5%. So if I calculate 5% of 40,000, that will be 2,000. But these were purchased on 1st October 2018. So that means for the current year, they were only for 6 months, right? So as a result, I will calculate it for 6 months only. So 6 by 12, my actual figure comes out to 1,000, right? So now, with respect to your material consumed, that is sports material consumed, opening balance given to us is 50,000. Purchases during the year is 20,000. Your closing stock is 45,000 and your sales during the year is 10,000. So a net value of 15,000 will be shown in your books of accounts, right? So now we'll be preparing the balance sheet. Right, capital fund is given to us as 2 lakhs. Life membership fee during the year is 50,000 and surplus of 78,000 from this income and expenditure has been calculated. When we do the total, right? So this will be, you can see my debit side is less as compared to my credit side. So when my debit side is less, what does it mean? My expenditure is less as compared to income. And certainly if I want to earn more, then I should be having more income as compared to my expenditure. So that will be a case of surplus, right? So this surplus is excess of income over the expenditure. So the balancing figure of 78,000 is here. As a result, we have shown this 78,000 over here. See, many a times what do? We show this life membership fee separately and we do not add it to capital fund. But the best part is that you show it by adding it to the capital fund, because life membership ultimately has to be added to the capital fund because that will increase the capital funds for the overall working of the organization. Then tournament fund is given to us as 60,000 and there are further more donations for tournament. That is for 20,000. So that is to be added to that particular fund itself. And there are certain expenses on tournament, right? Those expenses are of 65,000. So a net amount of 15,000 is left. Then whatever subscriptions you have received in advance for the next year. See, income received in advance is always a liability till the time it becomes due, right? So whatever subscription you have received for the next year, that means it is not yet due. So as per the accrual concept, say it will be shown as a liability. And whatever are your salaries that you have not yet paid, that means outstanding salaries are those expenses which have become due but you have not paid. So these are to be shown as liabilities. Okay, 6,000. So now moving on to the asset side. Asset side, you have sports equipment. You have purchased the sports equipment and the overall value is 45,000. Then your ground is for 1,20,000. Now your billiards table was initially 60,000, to which you have charged a depreciation of 6,000. Asset is always shown as actual value minus the depreciation, then the net value, right? So 6,000 is the depreciation. So my net value comes out to 54,000. Then my 5% investments are 40,000 and accrued interest on investment is 1,000. Then subscription outstanding is 5,500 and cash and bank balance is 87,500. This cash and bank balance, I have written it from here. The closing bank balance, right? So when we do the total, you can see the total is coming out to be the same. You do not have to calculate any balancing figure. Now, one more question. From the following information and receipts and payments account of Delhi Medical Society, prepare income and expenditure account for the year ended 31st March 2019 and balance sheet as at that date. Receipts and payments account is given to you, right? And certain additional information is given. On 31st March 2018, the club possessed books of rupees 2 lakhs, furniture 85,000. Provide depreciation on these assets at the rate of 10%, including the purchase during the year. Subscription in arrears in the beginning of the year amounted to 3,500 and at the end of the year 5,500 were outstanding. The club paid 3 months rent in advance, both in the beginning and at the end of the year. So you can see the previous question was related to you can say a club, right? And this is related to you can say, medical society, right? So accordingly, your things or your terms will be different because both of them, they are dealing in different kind of activities. So in this case also, you have to prepare your income and expenditure account. So if I start with the rent, so the total rent that you have paid for the current year is 16,800. And you need to add the advance that you have received in the beginning of the year, because whatever advance you have received in the beginning of the year, it belongs to the current year. So I have added that and advance at the end. That means if in the current year, any advance you have received, that is for the next year. So that is to be subtracted. So the final figure is 16,800. Then whatever wages, lighting charges, office expenses you have paid, that is to be shown as it is. Then to depreciation. For depreciation, furniture and books are considered. It is given as depreciation on these assets at the rate of 10%, including the purchases during the year, right? And you have to charge the depreciation on books as well as on furniture, right? So if I talk about books, here I have books, that is 24,800. So 10% on that. Wait. Okay. So your total books are 2 lakhs, right? Plus that you have purchased for the current year, that is 24,800. So my total books comes out to 2,24,800 and depreciation on that will be 22,480. Similarly, for furniture, my furniture is 85,000. That's it. So 10% on that, that will be 8,500. So total depreciation comes out to 30,980. Now moving on to the income side, entrance fee is given to us as, okay. Entrance fee is given to us as 5,500. Then subscription, total subscription received is 1,80,000. and arrears at the end. That means current year outstanding is 5,500 and arrears in the beginning. Arrears in the beginning means that will belong to the previous year. So that is to be subtracted. So my net figure of 1,82,000 is here. Then donations during the year are 16,500. These are general donations. So I have shown it here in the income and expenditure account. Then interest on deposits, that is 2,400. Now just have a look. Interest on deposits is your total deposits are of 1,20,000, on which you have to calculate the 8% interest. So if I talk about 1,20,000 into 8%, that is 9,600. But this interest is starting from the date 1st October. So this will be into 6 by 12. So the total interest comes out to 4,800. But out of this 4,800, how much we have received, we have to see to that, right? You can see interest on deposit is 2,400. So that means total amount due is 4,800, but we have received only 2,400. So what we'll show it as interest on deposits 2,400 plus accrued interest. That means interest which is due but not yet received. So 2,400, another amount. So total comes out to 4,800. Now you have some profit from the seminar also. They have given you that proceeds from the seminar are 23,200 and expenses related to this seminar are also given to you. That is 20,200. So from the given proceeds, we will minus the expenses and a net amount of 3,000 will be shown in the amount column. Now we have written down all the things, then we'll do the total of both the things. When we do the total, we can see again, in this case, debit side is short as compared to the credit side. So this debit side is the surplus figure. That means profit, because my expenditure is less as compared to my income, right? So as a result, here I will be showing it as the surplus. That will be my balancing figure. Now I need to prepare my opening and the closing balance sheet. Now, why do I need to prepare the opening balance sheet? Because the capital fund figure is not given to me in the question. And to complete my closing balance sheet, I need the capital fund. Then only I can prepare the balance sheet. Right. So with respect to your opening balance sheet, advance rent, subscription in areas at the starting of the year, books, furniture, and cash in hand is given to us. So we have mentioned all the things on the asset side because all these are the assets of the organization. Now on the liability side, there is no figure. So when we do the total of both the sides, my balancing figure is coming out to be on the liability side. And that figure will be my capital fund figure, right? Now, if I talk about the same thing for the closing balance sheet, subscription in areas at the closing date is 5,500. Advance rent we have received is 4,200. And books, we have the initial balance of the books was 2 lakhs. Then there were purchases during the year for 24,800. So the total value comes out to 2,24,800. But at the same time, there was a depreciation on this. So that is 10% depreciation, 22,480. So the total amount comes out to 2,02,320, right? Then you have furniture. Furniture is 85,000, right? Now in this furniture, again, there is a depreciation of 10%, that is 8,500. So your net amount of furniture comes out to 76,500 on the closing date. Then cash in hand and cash at bank, you can get it from your receipts and payments account. I'll show you here, right? So that is to be shown over here. Then you also have 8% fixed deposits, 1,20,000, on which there is an accrued interest. Now see, here I will be showing only the accrued interest because whatever interest we have received, that is my income and I have received it. So and it is written in the income and expenditure account. But whatever income I have not yet received, that is my asset. So that is to be added over here to the fixed deposit, and my total fixed deposit amount will be shown as 1,22,400. On the liability side, government grant is given to us, that is 2 lakhs. Now, out of this government grant, we will subtract the medicines and the salaries, right? Because that grant is only meant for that purpose. So my net amount of 20,000 will be shown in the amount column. Capital fund, I have calculated it from the opening balance sheet. That is 3,24,600. You can just see this, right? So to this, I need to add the surplus that we have calculated in the income and expenditure account. That is 87,320, right? And we also need to add the amount of life membership fee that we have received. That is 25,000. So the total amount is 4,36,920. When we do the total of both the sides, we get the same answer, right? Now, whenever we are talking about the healthcare accounting, do remember that the healthcare accounting includes several unique aspects which will not apply to any general or business accounting, right? Because whenever we are talking about these healthcare facilities, then no matter whether it is a large organization or a small one, but it has to deal with certain intricacies related to the layered economic components, because they are associated with the patients, their payments, then private insurance, government-backed programs. So all these things are to be taken care of in their day-to-day working, right? So whenever we are talking about this ongoing shift of the healthcare system away from fee-for-service compensation towards value-based reimbursement, because it's not just that you're providing the services, you're taking the fee. No, there are many other things that you have to take care of, because you know that there are so many insurance companies involved, maybe the government organizations involved. So there are many layers of the working. So you have to take care of each and every layer, and then you have to deal with the intricacies and the complexities that will be involved in your healthcare accounting. And based on that, then we will be moving ahead further. So as a result, now if I talk about what exactly is healthcare accounting. See, if I'm talking about healthcare accounting, no doubt it has similarities like any other professional accounting organizations. Like even they have to report their results, then they have to analyze their results, they have to maintain the financial records, they have to keep a track record of their cash flows and various other things. But the major thing that is different here is that um, there are certain intricacies of accounting that involves complex layers, associated layers in case of healthcare, right? And these And when we are talking about these layers represent the multiple parties that are associated with the healthcare business. Like, you know, I'm talking about the patients, the insurance companies, the healthcare providers, the pharmaceutical companies, the government agencies. So as and when more and more number of people and parties are involved, so the overall process becomes more complicated, right? And you have to take care of each and everything in your books of accounts. That means you have to, you know, keep a track record of the payment. Then you need to keep a track record of the dealings with the insurance company, the government organizations from the patients. How much are the patients going to pay? How much the government organizations will pay? How much are you will be receiving from the insurance companies? And when you will be receiving, when it is due. So all these things keep on uh, creating layers in the healthcare accounting. Now, whenever we are talking about this healthcare accounting, it's not that they are not going to follow the accounting principles. They do follow the gap, that is the generally accepted accounting principles, right? And there are certain things, you know, which needs a special attention over here. That is accrual and cash accounting. See, when we are talking about the accounting that is involved in your healthcare organizations, then in that case, you know, some items are to be dealt on the basis of cash basis and some on the basis of accrual basis, right? Like for example, if a patient is coming to you, right, in the OPD department, so you cannot say that, okay, you get your services today and you can pay after 15 days or maybe after a month. So that way it has to be considered, or it has to be dealt with on the basis of cash basis. right? But there are certain other things which has to be considered both ways, cash as well as accrual basis, right? So at times you have to consider the cash basis. Like for example, if you are recording the revenue and expenses when the transaction has been simplified, like I told, gave you the example, when the patient is coming in OPD just to visit a doctor, then it is certainly cash basis, right? And when I'm talking about this cash basis, no doubt cash basis is much more simpler and straightforward, right? But yes, there are certain other things which you have to consider based on the accrual basis. Like if I'm talking about your general salaries and all. So all these things are to be taken into account. Then, as you know, that like any other organizations, the healthcare businesses, they are also following the gap principles. But at the same time, these healthcare organizations, they do produce financial reports also. And these financial reports will give you the information related to their overall working during the entire accounting period. And it will give you the relevant information to the public, the hospital trustees, the management, and various other stakeholders associated with the organizations, right? And with respect to all the details related to your cash flows, your balance sheet, your operations, all the details can be taken from the statements that they prepare. Then at the same time, even the depreciation has to be taken care of. As I told you that, depreciation is to be allowed on all the assets that you are using in your business, except for land. But still, if I talk about the hospital industry, the healthcare providers, they use very, you can say, up to date or hi-fi IT infrastructure equipments, the capital equipments, the commercial buildings, and all these things, they do depreciate over time. Right, but you have to see that the basic, or you can say the high-tech IT infrastructure, it depreciates more quickly as compared to others like your building and all. So accordingly, you have to consider all the things related to the depreciation, right? And you know that there are numerous assets that you'll be using in the business, which will require depreciation. So accordingly, all these things are to be taken care of. Similarly, you also have certain payments and receivables related to the medical services, because there might be a possibility that the patient is getting the treatment done and immediately is making the payment. But there might be some other patients, like they have their Mediclaim. So that means you will be getting the payment only from the insurance company, right? So that involves a hell lot of calculations and working the follow-up so that you can get the payment from the respective insurance company. Similarly, there are some other patients who are associated with the government organizations or their respective organizations. So for them, you will be getting the payment. Some payment is being received from the patient, some is to be received from their respective organizations. In some organizations, they provide the cashless services, so that means the entire payment will be received from the organization. So the time period involved, the payment, the follow-up, so everything has to be taken care of. Similarly, you have certain payer mixes and charge masters. So in this case also, that whosoever is your respective, service provider and the payment agency. So the follow-up action, the kind of contract, or maybe the kind of terms and conditions that are involved, all these are to be taken care of. And similarly, we have certain credit balances and outstanding checks. Because many a times what happens, suppose a patient was admitted, and when you had asked for the payment, whatever amount they had deposited was more as compared to what was due at that point of time, right? So but maybe after few hours the patient is no more, so that amount is still standing in your account. So many a times what happens is, sometimes the amount is due and is to be paid from the patient, and the patient is no more, and many a times the amount paid is more as compared to what is due. So all these things are to be taken care of, and these are to be treated in the form of credit balances and outstanding checks. So in this case, it again involves like how you will be dealing with such transactions, and how to wind up the transactions in such a case, because if there is no one to follow up, then what to do, right? So in some states, funds from such uncollected checks must be turned over to the state government, because it becomes a kind of unclaimed property, right? Or like how to deal with it. So all these things are to be taken care of. So ultimately we can say that when we are talking about the healthcare accounting, no doubt it has a major impact on the patient's health, but still at the same time, as an organization, they have to complete their books of accounts also, right? So this work basically involves finding various ways of making the facilities, the patient care strategies more financially efficient, so that the overall care quality is not hampered, right? So as a result, this branch of accounting, or basically this service in which you are dealing with, is certainly very crucial and very, you can say, sensitive to the health and emotions of the people. But still, when it comes to money and when it comes to completing the records, you can't just talk about the emotions. So you have to take care of each and everything. So with this, we come to the end of your non-profit organizations. And now we move on to the working capital. See, whenever we are talking about the working capital, we have to first understand that working capital is the capital that we require for day-to-day operations. That means we are talking about the short-term funds that you require for your operating expenses, or for your operations, right? So whenever we are talking about this working capital is always a major topic for discussion. Like, how much capital is required, from where we can arrange the funds, and what are the different concepts related to the working capital. So let's just try to explore that. Whenever we are talking about the working capital, as I told you, it is the capital required for day-to-day operations. This capital is divided into two categories, that is gross working capital and net working capital. When I'm talking about gross working capital, that means I'm talking about a quantitative aspect. But when I'm talking about the net working capital, this is more of a qualitative concept. Now, what is the difference between the two? See, when I'm using the term gross working capital, that means I'm talking about total current assets, which is known as gross working capital, or this working capital is also known by the name of circulating capital, right? When I'm talking about the total current assets, then it is different types of current assets, like I'm talking about cash, the marketable securities, accounts receivable, inventory, prepaid expenses, advance tax paid, all these things. So that means here the concept is more on quantity. That means it is more, you can say it is a broader concept, right? But it has its own significance, because whenever we are talking about the gross working capital, it focuses our attention on two main aspects of the current assets management. That is optimum investment in current assets, because whenever we are talking about the investment that is required in current assets, then it should be adequate enough for the firm, or you can say we are talking about that the investment in the current assets should not be inadequate, because ultimately it is the current assets because of which you are able to conduct your business, right? Because if at any point of time you have inadequate working capital, that will hamper your production, that will affect your solvency of the business, because you will not be able to repay your current obligations. Secondly, it is also related to financing of the current assets, because whenever we are talking about these current assets, there might be a possibility that you need more amount of funds, right? So whenever you need these funds, so that means more amount of funds are required, because there is more business, or there is more activity happening in your organization. So there is always a need to provide funds quickly, because in case of current assets, you cannot wait that, okay, I'm going to wait for the next 6 months and then things can be taken care of. No. So these two points make the gross working capital important. But the other concept, that is net working capital, is more taken into care, or you can say it is more useful, because when we talk about net working capital, it is the excess of current assets over the current liabilities, right? So in this case, we say it is the amount that we are going to get out of the current assets that will be used to pay off my current liabilities. So it can either be positive or a negative. But if it is positive, that means I'm talking about a situation where my current assets are more as compared to my current liabilities, right? So certainly I'll have more amount of funds, and my solvency position is good. But if it is the other way around, then in that case, it means that my current liabilities are more as compared to my current assets, and that will be a situation where I might not be in a position to always pay off my debts as and when they become due, right? So ultimately we can say that this net working capital is indicating the liquidity position of the business, while the gross working capital was just giving me the quantum of the working capital with which the business has to operate. So ultimately, even in case of net working capital, it again focuses our attention on two major aspects. That is maintaining the liquidity position, because ultimately with the help of current assets, you can only pay your current liabilities. And it will also help you to decide the extent of long-term capital that is required in financing the current assets, because you cannot just say that always your current assets are financed by your short-term obligations. Many a times you even have to make use of the long-term capital, because there is some portion of the current assets which is always involved in the business, which is known as your permanent working capital, so that you can finance with the help of your long-term capital. Now when I'm talking about this kinds of working capital, you can just see that the working capital is segregated into two main concepts based on two different parameters. That is based on the concept of base and the concept of time base, right? On the concept base, we have gross working capital and net working capital, which we have just discussed. And based on time, we can have permanent or regular working capital and temporary or variable working capital. Now, if I talk about the temporary and permanent capital, you can just have a look. If this line parallel to my x-axis is the permanent or the regular working capital, that is always involved in the business, whether it is the peak time or it is the lean time for my product, but this will always be there in the business. That means a minimum amount of capital that is always to be involved in the organization. But there is some other type of capital which is known as temporary working capital, which is involved only during the peak season. That means when my business is at its peak, maybe if I have a you can say seasonal product. So in case of seasonal product, my requirement for working capital increases during the peak season. So this zigzag line will be my temporary or variable working capital that is required during the peak season. But this example, I have taken it for a stable firm, right? Then when I use the term stable organization, that means, your working is stable throughout the year, right? But if I talk or you can say talking about stable throughout the year, in the sense that my organization is a well established organization, I'm not still struggling to cope up with the market demands. I am into a regular business and it's a stable organization. But if I talk about a growing business, a growing firm, which is still not at its suitable condition, or maybe not in a stable business, they are still growing. So in that case, their permanent or regular working capital will keep on growing with the passage of time, because with the passage of time, they are still growing in their business. And with that growing business, their temporary or working capital, their temporary or variable capital will also keep on growing. And again, it will be a zigzag line, because in that case, depending upon whenever there is more requirement of capital, that capital is to be shown in this way. As I told you that with respect to your working capital, you have two major components, that is your current assets and the working capitals. Current liabilities. Current assets, as I've given you the examples, like you have your cash, inventory, marketable securities, debtors, short-term investments, all these things. And with respect to your current liabilities, you have your bank overdraft, short-term loans and loans, sundry creditors, bills payable, short-term borrowings, proposed dividend, like that. Now, if I talk about the importance of your working capital, see, working capital is very, very important because your day-to-day operations are being taken care by with the help of your working capital. Because if at any point of time you do not have adequate working capital, you will not be able to pay off for your debts, and at the same time, if you do not have a sufficient amount of working capital, then you will not be able to manage, especially in case of certain adverse situations like natural calamities, emergencies, etc. And if you have excessive working capital, that in that case, it means that surplus cash is lying with you, or maybe surplus inventory is lying with you, which is not adding to your productivity. And overall, when you have surplus inventory lying at your disposal, then it will ultimately add to your cost, because the holding cost of these inventory is too high. And at times it becomes really difficult for the organization to manage with the such huge piled up stocks of inventory, right? Now, when you are talking about the aspects of these working capital management, we have four major aspects. First is that you need to determine the total funds that are required to meet the current operations of the organization. That means I'm talking about the level of current assets. Secondly, you need to decide the structure of the current assets. That means when I'm talking about the structure of the current assets, I'm talking about the proportion of long-term and short-term capital that will be required to finance your current assets. Thirdly, you need to maintain certain aspects like cash, inventory, and receivables. That means I'm talking about the suitable policies and procedures and their reporting systems for controlling the individual components of working assets, which form the major, uh, you can say, components of your current assets. And the last one is to determine the various sources of working capital, right? Now, if I talk about that, what is the basic objective of this working capital management? See, whenever we are talking about this working capital management, first of all, we need to ensure the optimum investment in current assets. We should neither face a shortage nor excessive investment. So as a result, we need to strike a balance between the two. That means neither excessive nor shortage. Secondly, we also need to strike a balance between the two objectives of liquidity and profitability with respect to usage of funds. Because when I'm talking about liquidity, that means I should be able to pay my debts as and when they become due. And when I'm talking about the profitability, that means whatever funds we are using in the business, they should generate the maximum profit for the business. So both the things, both the objectives should be taken care of. Then to ensure adequate flow of funds for current operations. As I told you that whenever the funds are required for your day-to-day operations, you should have those funds as and when they become due. And to speed up the flow of funds or to minimize the stagnation of funds. See, whenever we are using the funds, whenever we are using the funds, then in that case, we have to see that, the funds should be made available as and when they become due, because you need to speed up the operations. You cannot wait for the, next 3 months that, okay, I am in need of funds today, but these funds will be made available after 3 months. So accordingly, we can make use of it. No, it will not be of use until and unless we have that timely availability. So accordingly, things are to be taken care of. I'll wind up the class for the day today here itself. And from operating cycle and cash cycle, we'll be doing it in the next class.